Okay, let's dive deep into a specific investment vehicle today. We've got a fantastic source to unpack. It's a detailed video analysis you shared with us, focusing on the ICICI Prudential Nifty Alpha Low Volatility 30 ETF.
That's right. And our mission for this deep dive is really just to take that source material, pull out the absolute must-know nuggets, help you quickly grasp the key findings about this ETF based on what that analysis showed.
And the source covered both the wider market and the fund itself.
Exactly. It gave us the broader market picture today and then really drilled down into this specific fund.
Okay, so pulling from that source then, what was the overall market snapshot it provided to sort of set the scene for us?
Well, the source gave a quick look at today's wrap-up. Nifty 50 saw a slight gain, just over 0.4%.
Right.
But the story, according to the source, was more in the broader market. The Nifty Next 50 mid-cap, small-cap indices, they were all up more significantly. We're talking over 1%.
Okay, so Nifty Next 50, mid-cap, small-cap, all above 1%.
Yeah, specifically. Next 50 up 1.25%, mid-cap 1.19%, and small-cap 1.33%, according to the data presented.
So a generally positive day then, especially outside the top 50 blue chips. Did the source mention capital flows too?
It did, yeah. The analysis highlighted positive FII and DII data, showed net buying in the Indian market, totaling a pretty substantial 5,496 crore.
Wow. Okay. And there was like a fun detail about a listener poll on the source?
Yes, related to a specific profit booking strategy they discussed. The source noted 76% of those polled said they hit their 6% profit target with that strategy.
While 24% were still waiting, I suppose.
Exactly. And the source also tried to connect the recent market movements to something specific. The video analysis suggested this positive trend we've been seeing lately seemed to kind of follow the RBI monetary policy announcement.
Interesting. And they even touched on a Nifty prediction poll.
They did briefly, yeah.
Yeah.
Mentioned a poll where 78% predicted Nifty would hit 2050-200 today.
Did it get there?
Not quite that exact number, but the source pointed out it closed above 2050-100, which, they viewed positively in their analysis.
Okay. So that's the market backdrop provided in the source. Understanding this broader context, the general mood and flow, it's always helpful when you're evaluating a specific fund, isn't it?
Absolutely. It gives you the environment this fund is operating within, at least from the source's perspective.
Right. Okay, let's switch gears then and focus on the asset itself.
Yeah.
The ALPL30IETF, the ICI Prudential Nifty Alpha Low Volatility 30 ETF. What were the essential stats the source provided?
So the source gave us the key identifiers. Current market price was 27.65 when they recorded.
Okay.
Total market cap stood at 187 crore. Over the past year, the range was a high of 32.67 down to a low of 24.
And the listing date?
Listed back on August 18th, 2020. So it's been around a few years.
Got it. And what about liquidity? Did the source comment on how actively it trades?
Yeah, they looked at trading volumes. They noted minimum daily volumes of around 1 to 2 lakh units.
So what was their conclusion on that?
Their take was that this indicates, decent liquidity. You probably wouldn't expect major issues getting in or out based on that volume data presented.
Good to know. So these are the foundational numbers, the sort of basic facts you need to anchor yourself when looking at this specific fund based on the source's report.
Exactly. The vital statistics, if you will.
Now let's pull back the curtain. What did the source actually reveal about what this ETF holds? What's inside the ALPL 30?
Okay, so the source broke down the asset allocation. It's heavily weighted towards large cap companies. That's 83.29%.
Wow, yeah, that's high.
The remaining 16.71% is allocated to mid cap companies. And the analysis confirmed no exposure to small cap, debt, or other asset classes. It's purely large and mid cap equity.
And the source made an important point about that high large cap allocation, didn't there?
They did, yeah. A key takeaway from the source was that even though it's mostly large cap, that allocation alone doesn't eliminate risk or a guarantee it won't see downturns.
Right, doesn't automatically shield it.
Exactly. And what were some of the prominent names in its top holdings, according to the source?
The source listed some of the big ones. Names like Sun Pharmaceutical, Party Airtel, ICICI Bank, Divi's Laboratories were mentioned.
Oh, okay.
They said the ETF holds 31 stocks in total, and about 85% of those are from large cap companies, which kind of reinforces that allocation point.
Got it. And sector-wise, which sectors are most heavily represented?
The source gave the breakdown there too. Healthcare is the biggest piece, 25.51%. Okay, big bet on healthcare.
Followed by consumer staples at 14.26%, then technology at 11.65%, and automobile at 11.34%. Those are the top ones.
So this part of the source gives you a really clear view of the underlying components, right? The companies, the industries. Basically tells you where the fund is placing its bets based on the data they presented.
Yeah, it's essential for understanding what might drive its performance.
Speaking of performance, how did the source show the ALPL30 has actually done
Yeah,
across different time horizons? This is where it gets kind of interesting.
it really does. The source presented a bit of a mixed bag. Today, it was up that small 0.33%. Over the last month, it showed a gain of 3.91%.
Okay, positive recently.
But looking back a bit further, over the last 6 months, the source showed a loss, down 2.64%.
Ouch.
And over the past year, also down 2.64%. So basically, according to the source's numbers, if you'd invested exactly a year ago, you'd currently be slightly underwater.
Mm. That recent underperformance definitely stands out, but the source also highlighted a much stronger long-term picture.
Oh, absolutely. Over 5 years, the source reported a return of 131.38%.
That's significant.
Yeah, they calculated this works out to an average annual return of around 26% over that 5-year period. But importantly, they stress this is an average, not a guaranteed return year after year.
Right. Averages can high volatility. And the all-time figure from listing up to its previous peak was even more eye-catching in the source.
It was, yeah. A notable data point, an all-time return up to its previous high was cited as 1,172%, which, they calculated, yielded an average annual return of 34-35% during that specific period. Before it corrected, of course.
So the performance picture from the source is quite varied then. Recent struggles over the last year, but really powerful gains over 5 years and from its launch up to that prior peak. Gives you a snapshot of its journey, but always remembering past performance isn't a guarantee.
Exactly. Shows the potential highs and the recent challenges based on the numbers presented in the analysis.
Now this next part from the source. This is maybe the most intriguing bit, especially given the ETF's name includes low volatility. The source had a really fascinating observation about how it behaved during a specific downturn.
Right. This is a really key takeaway from their analysis. The source noted that from its all-time high, this ETF saw a correction of approximately 25%.
25% drop from the peak. Okay.
And they calculated it's currently trading about 14.84% below that peak. So roughly 15% down from the high right now.
And the comparison they made to the Nifty 50 during that period is really telling, isn't it?
It really is. The source highlighted that during a specific market downturn, they mentioned roughly September to March, April, the Nifty 50 index corrected by about 16-17%.
Okay, 16-17% for the Nifty.
But in stark contrast, this ALPL30IETF corrected by approximately 25% during that same general time frame.
Wow. So wait, despite being called low volatility and having, 83-85% large caps, it actually dropped more percentage-wise during that correction than the broad Nifty 50 index.
Okay.
According to the source's data, that feels counterintuitive.
It does, doesn't it? And the source actually addressed this. Their explanation was that this difference really boils down to the specific stock selection within the ETF.
Ah, the individual stocks.
Exactly. The individual behavior of those 30 stocks versus the broader market movement of the Nifty 50. The source suggested that during certain downturns, just following a broad index might actually lead to less drawdown than this specific basket of 30, even if the basket is targeting low volatility.
So the low volatility aim doesn't always translate to lower drawdowns than the index in every scenario.
That seems to be the source's observation for that specific period. However, they did balance this by noting that overall, looking at the longer term we just discussed, this ETF has delivered higher returns compared to the Nifty. So it's a trade-off, perhaps.
That's a really nuanced insight from the source.
Mm-hmm.
It definitely pushes back on the simple idea that low volatility or large cap automatically means less risk or less drawdown than an index like the Nifty 50, at least based on this specific period they analyzed. It seems the actual stocks chosen matter a lot.
It really highlights that the composition and how those specific stocks react under stress is critical, even within a themed fund like this.
Okay, let's wrap up with one specific technical indicator the source mentioned, and maybe more importantly, their crucial final piece of advice.
Right. The source provided the current relative strength index, the RSI, for the ETF. They noted it was at 61.8.
And what was the source's perspective on that RSI value? Was that seen as high or low?
Based on their specific methodology, The source considered 61.8 to be quite high. They mentioned it's far above what they typically look for in, say, short-term swing trades. They keep that around 40, 45 max. And they felt it was elevated even for initiating long-term positions
Oh.
using their approach.
Okay, so high RSI, according to their method, and the most critical message, the one the source really hammered home at the end.
Absolutely. The source's concluding point was a really strong reminder about the vital importance of doing your own thorough analysis, your own research, before making any investment decision.
They didn't want anyone just acting on their analysis alone.
No, they stress that their analysis is just information, not an investment recommendation, and that personal due diligence is, well, non-negotiable.
So you get a specific technical data point from the source, the RSI reading, but the overriding final message is you absolutely have to do your own homework.
It just reinforces that while external analysis provides valuable data and insights, the ultimate responsibility for investment choices always rests with you, the investor.
Okay, so we've really dug into this listener-provided source now. We covered the market context it set, the fundamental details of the ALPL30IETF, its portfolio makeup, its performance, that interesting mix of recent dips versus strong long-term gains.
Yeah.
And perhaps most significantly, that observation from the source about its larger correction than the Nifty 50 during one period, despite the low volatility and large cap focus.
Yeah, there's definitely a lot to chew on there, especially that point about specific stock behavior versus the broad index during stressful market times.
So based only on the source material we've explored in this deep dive, here's maybe a thought to leave you with. The source highlighted this apparent contradiction. A low volatility ETF experiencing a larger percentage correction during a specific period than the Nifty 50 index. Given this data point presented in the source, what might you want to explore further about how different kinds of investment vehicles, not just this one, actually behave during market downturns? And how does that potential for higher long-term returns, which the source also noted for this ETF's history, balance against potentially higher volatility or deeper drawdowns in certain specific periods? Something to maybe add to your own research journey.